Welcome and thanks for joining us today. This is Maxi. I'm Max and I'm joined with Sid today. We're going to dive straight away into the markets. So we're looking right now at the US dollar index, the DXY. We've been tracking this one for the last, pretty much every video for the last month at least. We were watching it first trade inside the channel there, which you have marked out in the blue lines. We saw that it was breaking out of the channel. We're expecting it to push up. And now we've seen it running out of steam a little bit. You can see that the SRSI on the bottom there has been in the overbought section for a few weeks now. And so we're still like now looking for it to maybe bounce down and retest the previous resistance levels there, turn those into support. And that is kind of the blue area you have drawn out there. And again, the DXY being the dollar index, we always like to track this because the dollar strength tends to move in inverse with the equity markets, meaning as the dollar gains strength and as the DXY index increases, we expect a little bit more bearish sentiment to visit the equity markets. And so let's start today by looking straight here at the DXY.
It's like you said, they move in inverse. So like we've been tracking this just because, we felt that it's going to break out of this channel that it was sort of chopping in for the past year. And it did. And it broke out. Then we got a bull signal with our indicator. Once again, this is, it's called the Maxsi Trading Buddy indicator. That's a custom indicator. And you can see how it prints bull signals and then a bear signal if it's topped out and if it's going down.
It also colors the body of the candles, which I actually really like that. So if
exactly.
If you look closely, the outline of the candle will remain the way it should. So a green candle will be outlined in green, but in a bear trend, the body of the candle will be red. In a bull trend, the body will be green. Makes it really easy to catch the trend or visualize the stuff in a quick overview.
Exactly. Like we wanted it to be like easy to use and visually easy to use, and like you said, we had felt that it was going to top out, and that was a few weeks ago, and last week it closed with the bearish sort of what's this, gravestone or inverted hammer doji. That's like bearish. That's a bearish type of candle.
So what you're looking for to see that candle is basically the small body with a long wick up above.
Yep, right here.
That is.
So it literally looks like if you take a hammer and like turn it upside down.
Inverted hammer.
That's what it looks like.
Sometimes there's a hangman. I think is another way it's described.
Yeah, that's like inverted though. Like
that's
exactly
like the inverted hangman.
But yeah, it's pretty. And also the stock RSI was also, it looked toppy because see how it's like flatlined. So
you can actually see the blue seems to be starting to push down again. So it looks on the RSI.
Yeah, exactly. Like if we let's see
in on that bad boy.
See.
Yeah, there you go. It's starting to turn down. So that means
it's rolled over.
So like the momentum of the direction here is shifting a little bit on the weekly chart. So
right. And like we talked about this, we predicted that it's going to drop, it's going to cool off, and then and it did right here. I've drawn see it waked, and now it's we had a small little retest today morning, but then see it's dropping back down. Now for it to continue up and keep going higher, it needs to do an SR flip, basically like convert resistance to support. So basically it needs to bounce on either of these supports, and it has to also stay above the our indicator strength band. So you see the strength band, you can see how in a bullish trend the price tends to bounce on the strength band, and in a bearish trend it keeps getting rejected on the strength band. So even if it cools off, it needs to bounce on either of these supports for it to continue higher. Now, if it either loses a strength band, and of course, if it comes back into the channel, this whole thing then it's clearly a deviation.
Mm-hmm.
And then this little thing, this little pump here would have just been a retest. And then you see, then this would have been just a lower sort of high uh,
Yeah.
from the last high. That is if it loses the strength band and if it continues falling.
Yeah,
Uh,
that's what the market bulls are praying for, basically. Because
yeah,
that
basically the
happens,
market bulls
the
are
market will
praying
run.
for that, and which will like lead me to the next thing that I'm going to share about the SPY and QQQ, because like you had said, they kind of move in inverse, the
Yeah.
SPY and QQQ. And right now, this is how last week's close uh, looked like. You can see it closed kind of bullish. It basically saved itself at the very last moment.
Yeah, it did.
And
It
the hope,
almost was dropping below the band, printing a bear signal
yeah,
too.
it
But
was
yeah,
it was like it was super volatile,
yeah,
and
it disappeared
the
last second. Also, just as a quick aside, the way that the bear print and the bull prints work with the indicator, they don't retroactively adjust based on market conditions. They are printing when the candle closes. So they'll
right.
pop up and they might disappear before a candle closes. But when a candle closes, if the conditions for the bull or the bear print are met, then that bull or bear print will be printed on the chart and will stick there. It won't retroactively be adjusted
Yeah,
somehow.
there's no repainting or
Yeah,
whatever.
none of
So
that.
it's like,
It's
you
a
know, it's none of that.
what you see is what you get. Basically, is kind of the
Exactly.
idea is to make it again straightforward, simple, clear.
Yeah, clear and visual to use, and then like you can see like basically how this is the S&P 500 as SPY. On the
Mm-hmm.
left side is screen. On the right side is a QQQ on the Nasdaq, and you can see how, you know, in 2022 it had topped out and it had printed bear. It had signaled bear with the red band right on top, and then same for the QQQ, and then we went into a bear market just like the indicator told us, and then it flipped bull this year, and then we've been on an upswing ever
Yeah.
since then. So it's got the tops and bottoms really well, perfectly,
Yeah.
and it you know, and so we were wondering if it does go back into a bear print or a bear signal, and that was the danger. It kind of looked like that briefly, but then the week closed bullish. So for the bulls, so we talked about how the DXY, you know, relates to equities. So the hope for the bulls is that the dollar, you know, ends up actually not bouncing, and it continues down.
Yeah. Falls
And
back
this
maybe
ends
into
up
the
being
channel, and then
exactly
we
a
have it.
deviation
Yeah.
lower high.
Yeah.
That's the best case for the bulls, not
Yeah.
for the forex bulls. It's for the market. So forex people,
stock market and
you
equity
know,
bulls.
if you use the indicator, this would have just been like really easy money.
Yeah,
you
you
know,
trade the dollar side of the forex market when you see a bull. You trade the foreign exchange side of it when you see the bears.
exactly.
And it's
And
very straightforward. And forex
but
markets have absurd leverage and insane amounts of yield, so or
right,
rather volume. So you can actually make some really ridiculous plays there.
exactly. And so the bull case for equities is that it's a cup and handle pattern. This is a common pattern, and
Yeah.
this is kind of what it looks like. And here's the chart. So let me pull it up side by side. So you can see how, like, you know, it's sort of a bullish continuation pattern, and you can see how we have that cup here, and then we have the handle, which is the downward
Yeah.
choppiness. So now, for it to confirm, it needs to break out.
Yeah.
And then
of that
how
top
you
channel there.
exactly the blue line right here, and
Yeah.
this is the same for the QQQ. You can see the same thing.
And it's interesting to note that with both of these, we are approaching, like, we're above the strength band. So we're not, the indicator isn't telling us it's time to sell. It still hasn't printed bear. So it's still
Right.
bullish. It looks like we're at the spot where we want to bounce. And the SRSI is in oversold territory. So we have lots of room
Exactly.
to do this.
So a lot
move.
of room up.
Things are looking
And
pretty bullish.
yeah, exactly. So it's interesting, and how you measure the target is that you take the distance from the base of the cup to where the handle is, and then you sort of like extend the same. Uh, you check the same height, and then you extend it upwards, and that's how you get the potential
Dang.
target.
What's the?
So,
Did you check what the percentages on that target? That's
no
that looks like a pretty
idea.
fat percent. I'm curious.
Yeah, I mean, it's definitely like new highs.
Yeah, that would push. That would
I haven't
definitely.
checked really.
I mean, before you get to the end of that pattern playing out, it would definitely have made new all-time highs for the SPY and the QQQ.
Yeah, see, like I think at like about 480 for the SPY, like that's already new highs.
Yeah.
But it's not going to go up in a straight line. There's going to be,
Of course.
pullbacks and retests and all that. So, but like eventually, basically when it breaks out of the channel, that's a really good sign.
Yeah.
So it breaks out, it bounces, and then you get that SR flip. That's probably a time to go all in as far as these go, because it's going to be everything is going to be green. We're going to have blast off.
Yeah, and we'll have a lot of room in our target to get to the top there. So good time to kind of like be greedy. Well, I would say a lot of retail at least is very fearful at the moment. Everybody's singing that the market's about to dump. We're all about to enter a recession, and the technical.
I mean, it has been a choppy market. Like look at it. Like we've just been
savage.
And say that's the handle right here.
Yeah.
We've just been like chopping. This is the weekly, so this is like multiple weeks that you're seeing the up, down, down. But we've been playing it pretty well with our group. So we use an indicator.
And so it makes technical analysis. There's definitely a good case to be made in the fundamental analysis side of things for why there's a very strong bear thesis in the market. But no matter how sound and incredibly well put together your bear thesis is, in order to trade based on a fundamental thesis like that, you're assuming that the market is rational. And we've seen that it's not a very rational market, at least not in recent memory. So, not to downplay the importance of fundamental analysis. It's absolutely a wonderful, wonderful way to understand, value propositions and potential like upsides. But we tend to bias our trading strategies very heavily into technical analysis,
which has worked out great for us because of course we stay away from earnings calls and stuff because then you can get a lot of flow happening, which can affect basically the chart. But in all other times, so 99% of the time, most of this trading is just automated. It's just and that's the thing. So it's going to follow the chart.
Yeah, that's kind of
automated.
That's kind of like a case that I would make for my, the thesis of why I prefer technical analysis over fundamental analysis. Fundamental analysis requires hours of research and a good fundamental understanding of the business and the product that you're researching. Whereas, and I guess I would add, not everybody has access to that. And whereas technical analysis requires only the data on the chart.
Yeah, exactly.
Everybody who's trading, no matter if they're using fundamental or technical or wwhatever,
or they're using a bot or algo or whatever,
or
it
a
doesn't
crystal
matter.
ball,
they're seeing the chart.
Yeah, or a cat that has its own YouTube channel. Whatever they're using, they're all looking at the same information, which is the chart data. And so I like to bias our strategy based on data that I know every strategy is built on, not just fundamental data. And that does, like you said, it has worked out pretty well.
Yeah, and it's good examples are bankrupt companies pumping and dumping and basically squeezing. We saw it on the chart coming. Carvana was a recent example. We played that really well and stuff like that. So there's no fundamentally, if you analyze those companies, those are really terrible crap companies.
Yeah, it wasn't.
But why? There's no reason for it to pump so hard, but that's the thing. It's because of
even
technical analysis.
Carvana was heavily shorted, but not epic levels of it wasn't 70%.
It wasn't like GameStop.
It wasn't 100. GameStop, I think it was 140 or something at one point. Whereas I don't know. That becomes questionable to the point of like, how is that possible to sell like 1.5 times of the shares that even exist in a company? That shouldn't be allowed. But yeah, it's definitely an interesting market, though. We're keeping our eye on the DXY now. We want to see if it is going to pull back here. And then we're watching now this cup and handle pattern on the QQQ and the SPY. If those guys play out, then absolutely bullish sentiment is back on the menu.
These are like really long-term things. So these are like months to, years.
Yeah.
Like this could be like next year, like next whole year thing,
Yeah, exactly.
time frame for it to like play out. So
yeah, like you said, it's not going to shoot straight up to the moon.
Yeah, exactly.
It's not crypto.
Yeah, it's not crypto. And speaking of crypto, like I think we had like finally like ETFs.
Yeah, ETFs has been the big news in crypto. Lots of people are excited for new ETFs hitting the market. European Union has approved a couple new ETFs as well in the recent months. So there's a lot of excitement about that. And then, of course, here you have pulled up, these are the current available ETFs that you can trade in the United States stock market. So this is a way for people who are interested in exposure to, the Ethereum or the crypto markets in general to gain that exposure without actually having to interact with those assets personally. They can buy these shares or these, these ETFs from their existing broker account using the methods that they're already comfortable with.
Okay, so like Robinhood, Fidelity doesn't matter.
Yeah,
like,
exactly. Although Robinhood, I think the bottom two there on the list, XUS and the US.
Yeah, I think these two aren't, but I briefly checked and most of the other ones are available.
Yeah. And then that's basically like a way you can expose not just your stock portfolio, but obviously as an ETF, this is something that's a candidate for a IRA account or for a retirement fund that maybe hasn't been super straightforward to invest into those assets. So it's really cool to see this like market getting a little bit more fleshed out, seeing a little bit more of this kind of like development where we're getting more avenues for institutional money to enter these assets. So I mean, people, there was of course rumors of the ETF being approved and stuff, but like we are in a bear market, and in a bear market a lot of this, what do they say? What's the saying? Buy the rumors, sell the news.
Yeah, buy the rumors, sell the news. And this is exactly what happened right here.
Yeah.
And I think we went over this in the last video. We kind of marked out areas. We knew that it was oversold. So it's gonna like do a retest, and that's exactly what it did. But it was gonna just retest any of these like weekly. So this is a weekly chart for Ethereum, and it was just gonna retest these weekly resistances and then top out and then continue down. And guess what? It's exactly what's happened. Like we drew these out before, and it was either going to be around here or around here, but it seems to topped out here. I mean, this was last week's close, which was kind of bearish. Like looking at the candle, unless it pumps above last week's candle, that will invalidate the bearish thesis. But see, we're already in the red.
It is sitting on a pretty decent support there, where the last like month or so of candles have been bouncing and finding pretty strong support. So if we do finally turn that support into resistance and rather flip to lose it, then I think we're going to see a pretty sustained sell-off. Right now it's still
it's
chopping
kind
a
of
little bit.
Chopping a little bit, but like and I think a long-term thing, we had already like shared this. Let's look at the but this was also based off the monthly chart, but like looking at the weekly too, like these are the kind of the supports that we eventually think that it's gonna tap.
So 14,
like it's gonna go
1410 and 1350 is about that range, in case you can't read those numbers for Ethereum. So that is where we're looking for. If we do get that push down, we do lose that support. That's where we're looking to see strong support manifest, and the price bouncing to then eventually turn into a bull trend again. But like
it's
just like with the
also
cup and handle pattern, this isn't going to be a very quick play out. It's going to be potentially a long, drawn out, slow grind down, and then
yeah, exactly. For this whole quarter, basically the rest of the year, and then next year we have the halving coming up, and there's gonna be chatter,
oh yeah,
but but until then, like it's gonna slow grind, and also it's important to note that we have a red band with our
yeah,
indicator. We don't yet have a bear signal, but like I think we'll get it soon. But it's
yeah,
either way, it's not good if price gets rejected at the band, like we
yeah.
discussed earlier.
Like we're seeing
That's not a
where
good sign.
exactly where it's like we did fall below the band when it was still green, and then we tried to push above it there, you see, and were immediately
Got
rejected the
rejected.
following week. So it does seem like the strength band is acting as resistance there on Ethereum,
Yeah,
which
exactly.
yeah, that's a bearish
And like you
indicator.
said, it basically started by the rumor, sell the news.
Yeah,
So this is a perfect example.
exactly.
And
And then we have
and Bitcoin seemed to basically be doing the same thing. Like we had marked out these areas that it could retest and sort of
yeah,
fall back down, and this is like in between. Yeah, it did kind of tap, see weekly resistance here, and it closed with the doji, which is undecided,
yeah, a little neutral.
but but looking at like Ethereum, they follow kind of the same direction.
Yeah, it is interesting to
And
see that Bitcoin is absolutely still above the green band. They're still like
mm,
trying to hold on to its bullish sentiment, but
right,
it's losing steam here. It feels like each of these
I think,
highs has been lower than the last so far,
yeah, exactly. There
and
you
then
go.
and then we're getting lower
Or
lows too.
yeah,
So
exactly.
so it's like
So I think it's just a matter of time till we
yeah,
like lose the band, and then these are kind of the areas
yes.
where we
So for
potential areas for a bottom
for people who are
potential.
more listening and not necessarily seeing this small number there, the targets for Bitcoin are 23,500 and 21,500, or
Yep,
right around there.
right around there.
So we'll have to
Yep,
see how this all plays out. It definitely
yep.
looks like a little bit of a Wyckoff distribution too on the
Oh yeah,
Ethereum chart.
on Ethereum, if you
So
look at the daily chart, like
yeah, exactly.
this looks like distribution. See
Yeah,
high, then it makes another
yeah.
high, and then it gets like rejected
So
here,
we're right about entering the market down
and we got a
phase.
bear signal
Bear
again.
signal, yeah, and the bull signal there is starting to become quite indicative of a divergence,
Yeah,
where it just deviated above during a bear trend. It's kind of like basically a bull trap.
it's a bull trap. That's
Yeah,
what it is. Exactly.
yeah. So you're trying to basically catch people's sentiment. People are like, oh shit, the market's coming back, bull market is on. People throw their money in, and then we continue the down like we expect. So
Exactly.
don't get trapped.
Yeah.
But
Took it trapped. Yeah.
yeah,
Exactly. So yep,
yeah. I
I
think
think that's pretty much
that's what we wanted to look at this week. So we are going to keep, again, as a quick recap here, we're going to keep a close eye on the DXY. The DXY seems to be topping out there. So it's on the left side of the screen right now. It seems to be topping out and then going to be looking to pull back a bit and likely find some support here on the support lines, turn those into support. They had previously been resistance. So do an SR flip, which is going to be confirmation for us that the DXY is going to run further up. If we do get that confirmation, that should spell a bearish sentiment for us in the stock markets and in the crypto markets. However, we are also observing in the stock markets this cup and handle pattern, which is a very bullish indication. So that's also on the weekly chart. So again, basically what we're seeing there is if we get this play out, then it'll
yeah.
be likely that the DXY fails to flip the resistance into support. It probably will push further down again, and then the equity markets will run and have quite a long runway. So if that happens, I would say the recession is more or less canceled, and we actually will have achieved the soft landing that Jerome Powell has promised us. But I'm a little hesitant to call that the case until we actually get the breakout of the cup and handle channel there. And once we do get that breakout, then it will be, a different story, a lot more confidence, a lot more confirmation from that. So we're definitely watching that closely as well. And then, of course, in crypto, the big news this past week has been, anticipation and excitement around ETFs entering the market. So we showed off a few of the existing ETFs already. There's also great ETFs recently hitting the market in Europe. So all of that is to say that there's a decent amount of new investment vehicles now hitting the markets that are opening up the doors to institutional money that maybe has been sitting on the sidelines of these crypto markets and hasn't really had the opportunity to enter those markets. And that, on a more personal note to you, maybe personally, that would include like IRA account money or, potentially hedge fund money, for example, like, people who manage these huge capital positions aren't allowed to do whatever the hell they want. There's rules and you have to invest into regulated vehicles. So getting an approved ETF actually is a big deal, even though, me and you might be like, I don't care, I can just go buy Bitcoin whenever I want. Yes, you can, but the majority of the money in the market cannot. So having those, coming online here is a big deal. And it's exciting to keep an eye on this. So we're going to keep watching this into the future and, hopefully stay tuned and tune in next week when we see a little bit more clarity on these pictures, and we'll see how these predictions have fared and how the markets are developing further. Until then, stay safe and happy investing, guys.